go. Here we go. Welcome back to another Stonk Market live stream. We actually got some bullish stuff this morning. Bullish catalysts this morning. Added a stock in the alpha report that I'm buying and sent that alert out. We updated our bear bull scale, went up. Some good analysis this morning. We got some yummy lines that we're looking at. The Qs are trying to gain the lead right now as we're watching here. Tesla bounces off 435, which is about $1 higher than our 433.99 line. And Nvidia, surprisingly, suffering a smidge post the AMD, or sorry, the H200 sales to China, which is actually surprising. You would anticipate that Nvidia would be moving more, especially given this should be a benefit to their bottom line. Back over 90K on the BTCs, sitting at 92.7. We got some bullish momentum over here. Even Alt 5, the scam, is up today, my opinion. Hashtag don't sue me, bro. iRobot trying to pop off a little bit. Well, we got 13% here. It's been memeing a little bit post, I don't know, meme beginning, I guess. But yeah, I mean, Fed's tomorrow, so you're going to expect some jitters between now and tomorrow. But really, we had good data today, so it's hard to be bearish. We had ADP weeklies this morning. We had JOLTS this morning. Both of them better than expected. I mean, ADP Weekly didn't even really get attention this morning. And I was really surprised by that. I mean, ADP Weekly, if I write this down over here, ADP Weekly, 4750K per week on average, ending Nov 22, better than the negative 30, negative print from last month. And that was the ADP October jobs report. October jobs was November, because we had 42,000 in November, 42 plus 42K for October, and then the ADP November was negative 32K. But the weekly suggests positive 19K. So there's something going on there with the seasonals or what? Potentially seasonal variations or something that hit that monthly report at the end of November to go negative there. I don't know, but at least on this latest data here on a weekly basis, that was pretty decent. So throw that in there. Now, as far as, let's see here, the Qs broadly, if we can regain 627 here, even if it's post-Fed, I think we're on a pretty bullish trajectory. So I'm looking forward to that. Let's see. Okay, let's get this in here. Hassett this morning was also yapping. Hassett says, a room now for the Fed to cut more than 25 basis points. Now, I want to see why he's yapping of that. So, okay. So it says, Hassett sees plenty of room to substantially lower Fed Reserve's benchmark rate. Hassett, frontrunner in Trump's search for the next Fed chair, according to Bloomberg, was asked by Wall Street CFO Summit if he would push for substantially lower rates. If the data suggests we could do it, like right now, I think there's plenty of room to do it. And if he meant more than 25 BP, he said correct. Yeah. So, but I mean, Hassett wants the Fed job. So to some extent, he's going to be shilling a little bit for Trump. So we know that. That's no surprise. Then as far as interest rate probabilities, which we should also look at the 10-year, we've got a 96.5% chance of a cut. That's no surprise. 10 years up about 0.1 right now. So still sitting at 4.18, basically same spot where it was yesterday. The 10-2 Treasury is at 58, same spot as yesterday. Odds of a rate cut in January are only 24.4%, so those are declining a little bit. And by the end of 26, we're only pricing in 2 cuts. 2 cuts by the end of the year. So, oops. Oh well. So, okay, good. So, let's go take a peek at what some of good old Wall Street is saying. There it is. Gained the lead on the Qs, by the way. So fire off a little gain the lead there. And then it looks like we've got Netflix still down a smidge here. Still falling, actually, on this Paramount deal. This Paramount deal has cost them a lot of money. I mean, you lost 108 all the way over here. And this Paramount drama, I mean, it's led them to break out to the downside on the downtrend that they've been on. So definitely a little bearish trajectory for the near term. But I think the value is actually really good in terms of what they're creating and already have created. But anyway, so, okay. Blue Owl commits $2.5 billion for points home equity deals. Wow. Yeah, I mean, it doesn't surprise me. There's so much money to be made in home lending. That's incredible. Let me see here. 2.5. Blue Owl committed $2.5 billion to housing finance point as institutional investors embrace non-traditional approaches to bankrolling U.S. homeowners. Wow. Wow. That's interesting. Will help Point originate as much as $10 billion in financing over the next 3 years. Cost of living is expensive for people, blah, 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 blah. Wow. Okay. That's a big private equity move right there for real estate. Okay, good. So, yeah, pump up the debt, baby. Now, is Point even a lender? I mean, they must be. Point equity. Point. So they are home equity line of credit, open-ended product. Will be 100% drawn at the time of origination. The initial amount funded will be based on a fixed rate. Additional draw features, you repay the balance, borrower make additional draws. Let's see, the rate may be higher for the new ones. Initial APRs are 6.5 to 15%. Holy smokes. Okay. Let's see. Origination fee of 5%. Holy smokes, that's expensive. Okay. Point partners. I don't actually think California is not offered under California finance law. Licensed mortgage product. Points home equity investment product is offered as a licensed mortgage product in these states. So they're licensed in some states. $15K to $750,000. Huh. So, and do they have an MLS? Yeah, they do. For some of the states that they operate in, I guess. That's interesting. California. Wow, they don't actually have a license in a lot of states. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 17! That's interesting. Huh. All right. Well, the equity institutions or the private equity keeps pumping. They keep pumping. Pumping the dollar hollers. All right. So let's go see what we got here. Sam Altman, Sprint to Connect, OpenAI's direction to fend off Google, fine. Let's see here. Gaza sits under rubble. Trump pushes Ukraine to accept peace deal, saying it is losing. Well, he's been saying that since day one. Trump's U-turn on NVIDIA changes the game for AI. We'll look at that. China's manufacturing is booming. Sure, They're exporting deflation to the rest of the world. Why would you not want this cheap Chinese stuff? Like, it's amazing how cheap you can get stuff. Consumer loans are getting harder to tally, so the risks are a little less clear, right? Because of BNPL. Detroit suburb, most expensive homes. What do we got? Subscriptions, blah, blah, blah. CBS, ads, new correspondent, supergroup, real estate, price slip, boring. All right, let's see what they have here. So this is the NVIDIA chip piece. I think this contributes a chunk to NVIDIA's bottom line. And these are the H200s, mind you. The H200s are more powerful than the H20s that China used to get. So this is considered to be really only about one generation behind. So I will say NVIDIA, it will go here. H200s are only about one generation behind Blackwell's, current Blackwell's. Big step up from H20s. Okay. So let's see here. Let's see. Counter argument, American cash or Chinese cash fuels American innovation. Sure, that's how they've been trying to fight this. You look at Telus, 9%. What the hell is that? You gotta be careful. Sometimes these like really mega high dividend plays, there's something sus. So what is it? Yeah, it is like a 9% dividend, isn't it? But what is this as a company? I don't even know. I mean, Toulouse Investor Relations. It's always how it is. Like, you get suckered in by these high dividends that are unrealistic to maintain for the long term. But let's go look. Diversity and inclusion. Agriculture, health, business, personal. What the hell is all this? Financial reports. Let's just go look at an annual report. So in their annual report, these people say, I don't even know what they are. What is this? MMA core business. Core business, telecommunications technology, including mobile and fixed, data management. Oh, okay. So some form of cellular play. And very briefly, I don't want to spend too much time on this because I want to look at the rest of what's going on in the journal. But if I go to their last 10Q, here's their press statement. Mobile and fixed customer growth, 280,000. Toulouse Pure Fiber. I wonder where they're even based. I don't know anything about this company, but let's just look at their financials quickly. So cash flow would be nice. Free cash flow, reconciliation. These are just the reconciliations. Would you give me the damn tables, people? Okay. It drives me nuts. How hard is it to just link your proper GAAP financial filing? I'm going to have to go to the SEC. Toulouse. But yeah, anyway, the point is usually there's a reason they're offering you bigly financial reports. That's so weird. They don't link to the SEC filings. Okay. Oh, it's a foreign issuer. Worse. Okay. Well, that helps me understand why it's so hard to figure out their financials here. But let's just go to financial statements PDF. Oh my lord. I click on financial statements PDF and you're going to give me a funky like 200-page document. 122 pages. Summary of results. Q3 operating revenues, other income 5.1. Those look like those are billions. Wow, that's a lot. Operating income 740. Net income. They have net income 32 cents. So what's their cash flow situation? How do they make this much money? I just never heard of this before. What are their margins like? Just quick look here at margins. Mobile products and services, total tech. I've got revenues of 3.8 billion and expenses 1.2. Seems decent. Health segment. There's a health segment too. Man, this thing's all over the place. That's interesting. I mean, this is actually surprisingly a lot bigger of a company than I thought it was going to be. I hate these financial statements. Free cash flow. I've got 611 million free cash flow. I mean, that's pretty good. Just sort of like scrolling around quickly. Oh, this is a lot cleaner. Thank goodness. So service revenues are increasing, equipment revenues declining, but that's okay. The service is going to be where the margin is. Operating income 5.1 billion, and then I've got expenses here 4.3, financing costs. Doesn't seem actually that terrible, honestly. How's their balance sheet? Do they have a bunch of liabilities? Oh, current maturities of long-term debt. Here's your problem, probably. Oh, here's your problem. Okay, so I knew there'd have to be a problem somewhere. So look at this. I've got current debts to pay of almost $10 billion. And I have assets of 1.8 with accounts receivable of 3.6. They don't have enough money to pay their bills. They can't pay their bills. They've got a big refinance cliff. They can't pay this dividend. It's not sustainable. So they're too high in debt. And from a free cash flow point of view, yeah, they have free cash flow, but look at that long-term debt. $26 billion of long-term debt. What was the free cash flow? The free cash flow was, I think it was like 400 million bucks, or there it is, 611 in 3 months. So I've got 611. Even if I do that for the year, I got 2.4. I got 11 years of debt, bro. 11 years of long-term debt, and they're paying out, and they don't have anywhere near enough cash to pay their dividend. So that's the problem. That's why the stock's down, because people don't think the dividend is sustainable. Huh. That makes sense. Yeah. Not an interesting play for me. I mean, this morning in the Alpha report, we just did a pretty big analysis on another stock that we're pretty excited about, and which I was surprised by. And I added, I initiated a position in it. We've got, I think it's live. I'm not sure if it's live yet. Yes. Okay. If you haven't joined yet, you could use, what's the code? Santa Reinvests. If you want to use the code Santa Reinvests, you could join the Meet Kevin membership. And then you could use that over at reinvest.co for the AI coming out this month as well. So that's exciting. But yeah, that makes a lot of sense. Here's a $20 billion market cap company that's basically bleeding out because you have expectations that they're going to have to either issue shares to raise money, or they're going to have to cut the dividend, or both. So this is a mess. This is just a mess. All right, let's go. I don't like it at all. I wouldn't touch it. I don't even care if it rebounds. They got to fix their crap there. Fix their crap. All right, so what do we have here? Chinese cash fuels AI. Yeah, we know about that. We've got, let's see here. Somebody says, from your experience, how often do analysts downgrade the stock? Blah, blah, blah. I don't actually pay zero attention. So let me rephrase that. I pay zero attention to analyst upgrades or downgrades because honestly, I think they follow the stock. When the stock goes down, they downgrade the stock. When the stock goes up, they upgrade the stock. Like, they are full-fledged noobs. All right, so domestic market doesn't produce enough of the chips. DeepSeek, blah, 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 blah. Actually, I read this morning. There wasn't really anything exciting in this. All right, next. Divided Fed is expected to deliver a cut. Hell yeah, we are. 96.4 something % chance that we're going to get our cutsy dutsies. By the way, I posted a little picture or video this morning of what the babies look like when they wake up, at least the 3 of them. because the others are school. But if you want to see that on Instagram, follow me there. I am Meet Kevin on Instagram. Federal Reserve officials gather Tuesday for their two-day rate cut session. This will be the final call for Powell. Well, the final call will rest with Powell. Can he get consensus together? Hawks worry about cutting too much and finding inflation a bigger problem in the spring. Doves fear labor market damage. Lack of data. September jobs report. Unemployment rate ticked up. Highest rate since 2021. As participation went up. August was revised to show negative jobs. Question about whether the payroll slowdown reflects weakening demand for workers or shrinking labor supply is obviously, what everybody's wondering right now. Although Jolts and ADP were pretty decent this morning. Somebody says it's a hinge moment, blah, blah, blah. Okay, what are the comments here? So once again, Jerome boxed himself into a corner. Why did he need to signal the market the rate was coming? Blah, blah, blah. Whatever. All right, so that's boring. China's manufacturing is booming, yes, we know. Job openings rise to 5-month high, but layoffs also up. Yep, we saw this. Hassett says room for bigger cut. Saw that. Boring. Trump's Nvidia deal, fine. Canada. Hassett. Oh, man. Apple's slow AI pace becomes strength. Right. Well, I mean, there's a shift going on. People, I think there's a reason Nvidia is not like skyrocketing as much. I feel like it should be skyrocketing on this China deal. Like, I didn't call for that or anything. I actually, in the Alpha report this morning, we talked about our strategy with chips a lot, and we've been talking about this for weeks. And we actually think, long and short of it, we think there are better plays than the, chip components right now. And we have this list of top 10 stocks to buy over the next 10 years. Obviously, not personalized advice for you. I don't know your situation, but they're not in the chip sector. They are. I think they're the next sort of downstream beneficiary, and those have been doing really well. So okay, let's see. Then, and I think that'll continue. Okay, so Financial Times, oil market faces super glut. Well, good. Oil prices coming down are fantastic because it gives consumers more money. This could actually be something that ignites consumer spending at the lower end even. Could help ignite consumer spending at the lower end even. So this is very good. Whether it's a glut or super glut, Brent has fallen 16%. Demand for China is growing more slowly due to a huge fleet of electric vehicles. Nice. Yeah, good. This is a fantastic thing, by the way, oil crashing. Or it's a sign of recession. Or both. Okay. So they're battling for more than just Warner Brothers. Well, what eyeballs, right? So you could advertise to them. Blah, blah, blah. What are they saying? Superior, this, that, blah, blah, blah. Looney Tunes could sum it up. Paramount's owners have made it clear they're willing to shell out even more. Netflix can afford to pay more. Blah, blah, blah. What could stand in the way? You've got the Trump drama. You got the bids. At the moment, let's see here. Rival to Disney in the streaming wars. Paramount wants to rejuvenate its cinema industry. Netflix has promised more theatrical releases. It's ideas. Netflix hardly needs scale, but what it has in quantity, it lacks in quality. UBS points out that Netflix has twice as many titles as Warner on streaming, but when it comes to titles rated 9 out of 10 on IMDb, HBO Max has 141 versus Netflix is 120. Oh, that's interesting. Yeah, that's interesting. Maybe pick up is what they're suggesting, basically. Pick up the quality. All right, okay, that's interesting. Thought they were going to make an advertising argument here, but that's good. That's good. Okay, cool. Let's check out the info here. So, how the AI backlash could shape midterms. I don't really care. Okay, then. Oh, new usage numbers. Okay, let's go take a look here. Quality is hard. Yeah, I see you in the comments. I totally agree. Quality is hard. All right. So, okay. There we go. All right. Competition between AI chatbots has been heating up. On Monday, we wrote about how Gemini's share of weekly mobile app downloads increased in late November following the release of Gemini 3. Yes. Gemini's growth is also evident on the web. Between August and November, Gemini's global visits doubled, while GPT rose 1%. Wow. That's insane. That's like a tweet right there. Let's slap that together. That's interesting. That's actually wild. So you've got, let's see here. Between, so what is that? August, September, October, November. In 4 months, in the last 4 months actually, Gemini doubled users, global visits, while ChatGPT rose 1%. Wow. Users, if we go take a peek here, let's see here. Here, let's drop in, I mean, I guess I could throw that into like little AI. So let's go. That's interesting. And then I've got usage growth or user growth. User growth up 30% to 346 mil at Gemini. And then ChatGPT up 5% to 810 million. So GPT is still ahead, but it's hitting that ceiling over there. Somebody writes, cancel GPT now using Gemini for free. I'm not going to pay for it if I could get similar for free. I have to say, and I've been saying it probably for about a month now. You probably already know this if you're here on the live stream. Gemini is amazing. It has gotten so good. And it is, in my opinion, superior to GPT. But that's been my opinion. I've switched over, and now I rarely go to GPT. And it's gotten so bad that I will now shill Gemini to Lauren, and I'll say, I can't listen to, what you're saying because you're a GPT user. I'm like becoming like AIist now. Like, how could you use GPT? Like, and it's weird because it's like, I don't own Google stock. I'm not paid by Google, but I feel so passionate about the product because I just think, I'm like, wow, that's good. So maybe GPT can catch up, but then how do you get people to go back? That's the other hard thing. Is like, how do you go from there to there? I don't know. All right. So Nano Banana is incredible. I agree. Okay. Code Red, we know. AI overviews, Gemini app, blah, blah, blah. Google search, AI mode. It doesn't include Google search. Let's see here. GPT weekly. Aside from Google's momentum, one factor could be slowing GPT growth. It's already captured the most easy and accessible users. Next phase of growth will be harder. Facebook, for example, reached 500 million users in 2010. and double to 1 billion, but it took another 5 years to double to 2 billion. OpenAI will likely face a similar growth trajectory to Facebook. All right. Yeah, I think this is very interesting. Google search trends for Gemini declining. Let's try it. Trends.google.com. Or sorry, for ChatGPT. Hey, who wants to go skiing this year? When are we all going skiing? Gemini. Yeah. Yeah, you're right. That's a gnarly decline there just in the... I mean, that's probably since the 3.0 release. Yeah, they actually got hit. They got hit on the 3.0 release. Wow. Wow. That's crazy. All right, cool. So let's see what's next here. Next. Google Glasses next year. Now this I'm excited about. How is Google doing? Googs 314. It's hanging out just fine. You know, I mean, it rejected up here, but it's been pretty stable. Floating over here. We have float down here. Huh. Okay. All right. So, Google expects to launch its first AI glasses. You know, Facebook really needs to do some catching up. But that's all right. They've got such an advertising base. Google is collaborating with Samsung and Warby Parker. Ah, that's why Warby's moved. Yeah, I mean, I was a big fan of Warby Parker as like, and I still am, as a potential like seller of AI glasses because they do make good glasses. So not bad. But a lot of people have already built that into their valuation. Like Warby's not selling for the cheapest valuation. Okay. What else? The information, that's that. Okay, good. So how's Ethereum doing? Ethereum, ooh, nice pop on Ethereum. That is, if I go to the hour chart, you can see some nice buy traction over here. Getting to the 3346 level as the Qs go positive pre-Powell here. And Joby's negative 0.5%. MP Materials keeps bleeding. That's no surprise. And then... Okay. Let's see here. Let's back up and go. 10-2 spreads, 58. 10-year yield is at 4.18. Political, Trump thrashes European leaders. I think they're weak. Could be interesting. We could watch this. Most influential man in Europe thinks Europe is full of losers. Oh, wow. I worry people are going to get hurt in the short term. Sounds bearish. They have the full video here? All right. What's this? Outgoing Crenshaw sets loose. Carolyn Crenshaw, a commissioner at the SEC, said it feels a little similar to the run-up of the Great Depression. Are you kidding me? Oh, no. 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 Okay. Outgoing SEC Commissioner Carolyn Crenshaw. We've got Feels a little too similar to run up to Great Depression. I could see that. True advisability of all these policies will reveal themselves eventually, but I certainly wouldn't be alone in analogizing the trend towards deregulation immediately prior to the stock market crash of 1929. Wow. That's a crazy one. Okay, let's see what arguments she actually has here. Let's see what she says. Oh, 1 sec here. There we go. See if that fixes that. All right. So, yeah, I did. All right, good. Her term, Crenshaw will depart as the lone Democrat in the SEC. Oh, she's the Democrat. An Army reservist and longtime SEC staffer. She questions the agency's push to stand up new regulations around crypto, worried it could upend investor protections. SEC is silencing shareholders as it hands companies the power to force shareholder lawsuits into arbitration. Oh, wow. I didn't know they were doing that. Is that true? Let me see here. Shareholder lawsuits, arbitration. SEC reverses course on mandatory arbitration. Really? The SEC clarified its position on mandatory arbitration provisions in company bylaws. For some time, the commissioner has scrutinized such provisions and refused to accelerate registration statements if they were present. This created a de facto barrier for companies seeking to go public that chose mediation or mandatory arbitration. Historically, the commission thought this might violate anti-waiver provisions of securities law and potentially foreclose shareholder class actions. Yeah, but shareholder class actions are like full AIDS, man. You know how many of these stupid things happen all the time? I got a letter right here from one. Yeah, right here. I literally just got this letter. I feel like I traded this or something. I don't even remember when I had this, but it says here, we have received securities litigation notice for Open Door, the class action, and our records indicate you held securities associated with the class action in your JP Morgan account during the settlement period. As a result, you may be eligible to participate. Please visit OpenDoorSecuritiesSettlement.com to review securities litigation notice and proof of claim. Well, seems like what companies try to avoid, huh? So in the presence of an issuer, investor mandatory arbitration will not impact the decision regarding whether or not to accelerate the effectiveness of the registration. So basically, companies can include mandatory arbitration without any pushback. Wow. I did not know that you could have that. That's very interesting to me. Part of her concern is pushback against regulatory rollbacks by Trump, including mandatory arbitration. Let's see here. This firm basically says TLDR. TLDR, companies going public could now include mandatory ARB. She worries this could reduce class actions. Honestly, I think a lot of people want to see fewer class actions. I think a lot of company investors want to see fewer class actions, not more. I mean, but that's my opinion. Yeah, who knows? But like, it seems like every company that goes public just gets class actioned. And that's interesting that they can sort of bury that into the shareholder rights or bylaws, basically. So that can get embedded. This can get embedded into bylaws. Okay. So Crenshaw, Trump might have fired her had she stayed on, but Trump never got the chance. She lost her renomination. Wide-ranging conversation discussed parting warnings for investors, her concerns about crypto and blurring the lines between investing and gambling. Well, that's also happening. Also worried about gambling and crypto. Crenshaw. All right. All right. Got it. Oh, and then they have the full interview. That was sort of like the intro there. Well, what do they say about, where's the depression part? Or 1929. Here we go. We live in an echo chamber where politicians and policymakers are really making their own truth through repetition. I mean, this is honestly absolutely true. And it drives me nuts because, like, you know, like him or hate him, you kind of have to agree Trump does this. Like, he'll say the same bullshit over and over and over again. Like, you know, the whale killers, the windmills are whale killers. You know, and the more he says it, the more people with zero critical thinking are like, oh, well, maybe he knows something I don't. It's full retardation. But whatever. So, I mean, you kind of know that, you know? It's like, you look at it and you go, all right, well, we know what we're going to get. You know? That's all right. So that's not wrong. The true advisability of all these policies will reveal themselves eventually. A very fragile time in the economy. People believe we're in a bubble around AI. Yet policymakers appear to be plowing ahead with these deregulatory efforts. So it's a combination of factors. Markets regulate themselves. All you need to do is give them an opportunity. You see, investors, the idea, investors should have the choice. The problem is we're not. History's shown that complete market freedom does not work. We're not actually letting markets decide. We're saying issuers can now have mandatory arbitration clauses, but investors have always been able to choose. If they wanted to have arbitration rather than go to court, they could. Right. That does take away the choice. Sure, that's fair. That's the point of mandatory, right? So independent agencies, their job is combat that. Okay, how worried are you about a crash? Oh, here we go, a crash. A crash. I don't know about timing. If I had a crystal ball, that would be fantastic, but I don't. I certainly think there are pieces in place that are analogous. Why can't I say this word today? Similar. Are we adequate? Are we adequately able to respond? We are sorely understaffed. I think we will have a response. I don't know what the response will look like. We had a huge exodus of expertise and institutional knowledge of how to respond. Nice. So basically, they're like, look, I mean, this is not uncommon. I'm going to make a note of this. Not uncommon for SEC staffers to move into private registration work, legal work, consulting, because the money is much more lucrative. So, I mean, you're going from, you know, you typically get that. You're a public servant, right, at the SEC. So, you know, the pay is never going to be what the public might be, or the private might be. But, you know, you get more job stability, presumably. I mean, maybe not under Trump. That actually might be a risk factor, right? Maybe Trump hurt the impression of job security at a regulator, right? So that could have upended years of this impression that, oh, you actually have job security if you're staying there. Somebody's asking me about Sailor and Bitcoin. You know, I actually, I bought a stock that has exposure to a crypto style play. It's not like an underlying cryptocurrency, but I don't know. That's a complicated way I put that. I mean, I guess some people could. It doesn't matter. Anyway, yeah. It's on our top 10 stocks to buy list. And boy, I was surprised that it just aligns with my 2x2 foundation. Valuation, pricing power. I always got to write this down. We got valuation, pricing power, balance sheet, and momentum. Right? That's my 2x2 foundation. I don't know why I have such trouble remembering those four things, but when I write it down, it's fine. So I like buying stocks when the valuation is low, when the pricing power is high, when the balance sheet is great or strong, and the momentum is bad. So I don't like stocks when they're like really high, right? I love stocks when they've fallen. Unloved crap. It's not MicroStrategy. I'm not buying MicroStrategy. 2x2 Rust Foundation. That's right. Yeah. No, and it's not a treasury company. I'll give you that. It's not a treasury company. It's not a long or short on Sailor or Tom. It's none of that crap. Okay. It's an actual. I'll just leave it there. Okay. Let's see. SEC. Okay. Pay to play rules. Investment advisor space. Let's see here. Power the money has. I don't think it's unique. Fine. Influence. What concerns you most about crypto? In the name of innovation, there is a fundamental attack on our legal structure. All innovation is not necessarily good. Some innovation certainly is, but innovation for the sake of innovation itself, whether or not it's truly innovation, needs to be looked at. I think she might sort of be implying like some, risks for even some of the leveraged ETFs, right? What's your message to the everyday investor? They need to be careful. The options to invest in all sort of products are going to be like never before. The marketing and sales pitches around these products, I think, are going to be everywhere in all kinds. And I suspect with fewer protections on how they're being advertised. I agree. People need to understand the market is not a casino. Folks really do need to take it seriously. We all know in the long term, the house always wins in the casino. Yeah. FOMO. Yeah. Yeah. I don't think she's necessarily wrong. I think she's right. All right. I save all my docs, like my PDFs and all the things I highlight and stuff. It's just really so I can pull it up for reference in the future. But I think it's also good to like save your sources. Like I'm a big fan of that. Like if somebody called me one day and they're like imagine, like I don't know that this would ever happen, but imagine the SEC called one day. They're like, Kevin, you said Gemini grew its user base by double in the last month. Where's your citation on that? I'm like, right here, bro. Oh, okay. So I don't know. I don't think they do that, but I always like to have something I could point to. I don't think most people on the internet do that. Just ramble about garbage and their opinions without clearly indicating what's an opinion and what's fact. But I just try to do that a little differently. I'm not saying anybody else's strategy is worse. I mean, other people do it better than I do. So let's see. Trump says Russia has the upper hand. Pressure on peace plan. YouTube is winning the battle for the manosphere. What the hell is that? Male only, creator driven spaces. Weird. AI's energy gusher, whatever. Let's see here. Powerful earthquake. All right, so this is boring. Boring. Jared Kushner became Trump's indispensable second peace envoy. Fine. Judge to release more Epstein stuff. Cool. Studies show your brain changes at 4 key ages: 9, 32, 66, and 83. Oh, that explains why I've become so stupid just last year. Human brain has 4 distinct turning points. New study. They found 4 major times. Okay, what are the changes? Childhood. All right, where it is. Adolescence. Adolescence phase identified lasts for 2 decades. Wow. So I basically just became an adult. That's hilarious. The brain switches gears and starts rewiring to become more efficient. When people are most vulnerable to developing a mental health disorder, it's also a critical time for brain development. The brain isn't stable until early 30s. Wow. How slowly we develop. Guys, I just finished mentally developing. Adulthood starts at 32, basically. Let's go, boys and girls. I just barely became an adult. Oh, boy. I just became an adult and I got 7 kids already. That's hilarious. All right. Very interesting. Let's see here. Boring, boring, boring. I'm 33, for whoever's wondering, which again means I just became an adult. All right, so, all right. Man, doomers, nothing. Pentagon picks Google AI for its millions of employees. Smart. Dude, Gemini's sick. Gemini's lit.
The future of American warfare is here.
Ooh. Today we're using genai.mil. Oh, that's cute. All right. What else? What's on the FTs, bros? And then let's look at some institutions. 94K Bitcoin. All right. Let's see here. Flight chaos. Man. Boring. All right, we'll go look at some of the institutions here in just a moment. Let's go take a look here. Ethereum. Oh, look, right at the line, boys and girls. Right at the line. 33.46. Right at the line. The Qs are barely trying to stay green. Tesla got a couple percent today. That's pretty good. Symbotic is finally hitting bottom. Good. Yeah, in the alpha report, when this ran after earnings, I'm like, this is not a buy. This is not a buy until it gets back to 64. It's under 64 now. So, you know, it's not a screaming buy. You know, screaming buy would be even lower. But this has been one of the great calls in the alpha report over the last year. Google only slightly green, circles up 5%. 5.5, UiPath 0, Netflix still bleeding a bit, Nvidia's still bleeding a bit. Nvidia's taking the Qs down a little bit. Got to get the midday trader move out. Alt 5 Scamorama up on enthusiasm here on crypto running. Okay, let's get into institutional research while I drink another cup of coffee. Are you satisfied with your service? You know this cup? Are you satisfied? Somebody says, Kevin, challenge for you. No coffee 1 week. I've done that. And I don't like it. I've done that many times. Probably 4 or 5 times in the last decade. Not interested. Besides, you ready? This is how I trigger people. You ready for this? Coffee's how I get my water. Gotta stay hydrated. Everybody gets so pissed when I say that. All right. So, SocGen, ANZ, let's see what we have here. Those are the Aussies. No. Risk-free. What is this? Rate path shallower than before. Oh, okay. Let's go see here. All right. So, a rate cut on Wednesday is almost assured. The SEC could be more, or SEP could be more interesting. Yeah, I agree. We expect Powell to reiterate there's no risk-free path. Could announce liquidity to support end-of-the-year funding. Hold on, let's see the repo. Wait, that'd be crazy. What are they talking about? How's our repo market doing? Repo's chilled out. I mean, they stopped the money vacuum on December 1st. So it should be okay. All right. Okay, yes, I know many of you want to know this top AI company that that Kevin's buying shares in. There's no better than reinvest.co. Okay. Obviously, I'm kidding. We did buy stock in a few other companies that we added to our top 10 stocks to buy for the next 10 years list. House Hack and Reinvest isn't on the list because that's already a given. So I kid. All right, let's go back to the sheet here. We expect Powell to reiterate. Okay, let's see. Market implied shallower than before. The FOMC meets on Wednesday. Market expects currently implied a 93% chance of a rate cut. Yeah, well, it's probably higher than that. Implied interest rates through next year. U.S. macro is clearly still at an inflection point, yet the outlook is obscured by a lack of data. Difficult to be precise. We're going to get the Hawk Tua. Dovish set of dots? I doubt that. Dovish dots and hawkish statement? I don't know about that. Let's see here. Labor market is weakening, therefore we cite on various dovish speakers. Inflation's getting stuck at 3%. That's been the reason so many people have gone hawkish. Funding spreads. Decisions rate straightforward. QT ended on December 1st. Reserves began to fall in the summer. This has led to a drain of reserves, ultimately leading to the termination of QT. Fed may need to step in to provide liquidity support and find itself regrowing the balance sheet. I mean, this is literally QE, baby. All I hear is BTC Moon on QE cometh. Okay. How could you bring QE and be hawkish? Somebody writes, everything pumped at 7 a.m. PST. Do you not know what happened at 7 a.m. PST? You should know. See, if you had the Alpha report, well, first of all, you would have been there as we covered it. It was actually really interesting because when the news broke at 7 a.m., I'm like, oh my gosh, this is bullish. And we look at the Qs, and it was like negative 15 or 25 bips or whatever it was, and it was not moving at all. It didn't move for like 3 minutes. Probably because it took forever for CNBC to actually cover it. And I'm just like, this is hilarious. Everyone else is slow. But that's why people like our alpha in the mornings. Remember, use code Santa Reinvest at meetkevin.com. You can join the alpha report. You get lifetime access to it. So the crazy thing is, like, the people who join, some people have been here since 2017. And, you know, they pop in and they get their insights and they're good for the day, you know? It's kind of cool. Okay. Funding markets we expect, repo operations, a Tomo-like facility. What the hell is a Tomo-like facility? Bro, who's Tomo? Here we are thinking FOMO, and then some people have FOMO, SOMO, now we have Tomo. What the hell is Tomo? I gotta AI that one. I'm too lazy to figure this out. Yeah, hell, if it gives me a head start, I don't need to use my brain. I mean, I'll try. Tomo, term. No, there's no facility word. What's Tomo? All right, I'll let that run. Tomo-like facility. However, we have changed our view based on comments in the minutes as well as based on where we see funding markets. We expect term repo, term operations to be offered over the year end, possibly the creation of a term something. The fuck? How do they write this? How do you come up with this bull crap and then not tell us what it is? The frack? See if Gemini can figure it out. Temporary open market operations. Oh, okay. So liquidity injections. All right. Cool. All right, let me write that down. Temporary open market operations. All right. Ample reserve regime. Let's see. To maintain ample reserves. Exhibit 2 shows funding spreads, the chart, rates outlook, dot plots. We wouldn't be surprised to see medium dots closer to 3% for next year. Bloody, bloody, bloody. What about the unemployment rate? 2 additional rate cuts next year. Blah, blah, blah. You know, maybe JPM usually the day before does a forecast. Let's see here. So, okay. I would say, okay, let's do this. So, this to me is really just liquidity. Basically, liquidity reduces private credit shock risk. Basically, bullish. Not full QE, obviously. You know, like, we're now at the Tomo stage of the market. That's actually hilarious. We've gone from FOMO to SOMO to Tomo. All right. Cool. Let's go see what the other suits are saying. Let's see if JP Morgan has their Fed outlook. They usually do. Ooh, they have a Netflix piece. We could look at that. Netflix. Strategia. All right, let's see what this is. Open Sesamia. Yeah, that's what we're going to call it. Ooh, let's see what they're saying about Oracle as well. Open. I gotta love me my PDFs. I'm like a PDF hoarder. You know? I hoard. That's what I do. Who knew I was a hoarder? Who knew? Who knew? Meet Kevin. He's a hoarder. He hoards PDFs. Somebody just emailed saying they're trying to invest. Yeah, if you have any issues investing, You shouldn't, but you can always email us.
Email ir@househack.com.
Okay. Cool. All right, so what do I got here? Welcome aboard, Shauna. All right, so what is this? Due for a bounce. Historic backlog, medium-term execution. Oracle has suffered a 40% sell-off. Let's see here. Cost of capital. We recently published our fundamental supportive quotes from one-on-one discussions. Near-term financial performance. Let's see. Diversifying, RPO balance. Okay, so Analyst Day raised the bar. Targets are impressive and demanding. We think the presence of resilient, sticky, and large recurring revenue streams allow for low volatility in Oracle, and they're calling for an outperform. All right, fine. So they're bullish Oracle. What do we have here? Financial advisor to Warner Brothers. We are suspending our estimates for Netflix. That's it? Yeah. All they're saying is we're an advisor. We're not going to give you any answer or insights anymore. All right. Well, that was boring. Sector rotation on BOJ hike. FOMC meeting on the 10th. Let's see. Macro. Blah, blah, blah. This is Japan's outlook. All right, well, that's boring. And then this is BNY. Okay, cool. What else? And global economy is cooking, but the kitchen is in chaos. Huh. All right, well, sounds entertaining. Goldman. Okay, what's Morgan Stanley up to? Charts? Let's go see. Morgan Stanley's got some charts. And then Rabobank says it's not priced in. Let's see what we have. Open Sesame. So it says, Morgan Stanley says 2026 edition, optimal portfolio, higher exposure to globals. I don't like globals. I like America. Majority of U.S. analysts expect M&A activity to rebound, mergers and acquisitions. That's cool. Global robot revenues by 2050, 25 trillion of robot revenues. AI-enabled robotics will be the third industrial revolution. Holy crap. Driving 25 trillion. That's 100% of America's GDP. America's GDP solely from robots by 2050. That's wild. Arguably the most advanced is China. Dude, China's going to eat our lunch on the manufacturing. China will dominate us. China will dominate IMO. Okay. AVs. AV launches. Europe, data centers. Household electricity bills continue to rise. Could it be good for solar? Electricity CPI is expected to remain sticky at 4 to 5%. China, global manufacturing dominance, high growth sectors like EVs, batteries, and robotics should allow it to grow its market share even higher. I agree. I think yeah, I totally agree with Morgan Stanley here. Okay. All right, well, bullish robots, I guess, huh? Yeah, that's really interesting. Okay. What about this one? This is RBA, so this is Australia, I think. US wants new friends. Okay, day ahead. And then, of course, we got the Fed tomorrow. That's boring. So, nothing there. What about here? Global economy is kitchen, but global economy is cooking, but the kitchen's in chaos. Uh-huh. Three dishes. Okay. Somebody says, what about the slave labor? Well, I actually don't think they have slave labor. I think they just have a lot of labor. So when you have a lot of labor, prices go down for wages, right? Like, would you rather have a job or not have a job? Like, I'd rather have a job. And if I'm in an area where labor doesn't pay a lot, it is what it is. But I'd rather be able to pay my bills than not pay my bills. You know, even though that's maybe a lower wage than what you can get in America, what are you going to do? Teleport to America? Trump will kick your ass out. It ain't gonna work. So. What's on the menu for 2026? Oh, it's just a video. No. How do I watch it? This implies it's on YouTube. Let me see here. Click here. A taste of things to come. Oh, I think I got it. Oh, they gave a summary right here. Global economy is cooking. So liberation, Ukraine, Europe, boiling pot of uncertainty, Supreme Court tariffs ruling. The most bullish thing that could happen is the Supreme Court kills tariffs, all of them, and just says all the tariffs are subject to Congress. And then in an election year, bro, it would be so. Oh my gosh, like all in, baby, all in on margin. Okay. All right. That was boring. All right. Let's go see what else there is out there. Repos. Let's see what CNN has for us. The commies. What do the commies have? Zelensky says Ukraine will refuse to cede territory. Oh, that's interesting. Let's see here. What is this about mortgages? China's trade surplus. Paramount, hostile takeover bid. We know that. All right. Let's take a look at some of this. Let's see what we have.
Is of mortgage fraud.
If somebody in two primary residences, that is not appropriate, and we will refer it for criminal investigation.
And we know this.
Democratic lawmakers Adam Schiff and Eric Swalwell. His warnings seem especially apt tonight because of a new piece of reporting from the investigative team at ProPublica. The headline, Trump's own mortgages match his description of mortgage fraud, records reveal. Quoting now from the article, in 1993, Trump signed a mortgage for a Bermuda-style home in Palm Beach, Florida, pledging that it would be his principal residence. Just 7 weeks later, he got another mortgage for a 7-bedroom marble-floored neighboring property, attesting that it too would be his principal residence.
Are you serious?
Instead, the two houses, which are next to him.
That's hilarious. Hold on. Insensitive, which are next to his sugar. Right. Let's get ProPublica Trump. That doesn't surprise me at all. Oh, yeah. Here it is. Let's see what President Trump did the very same thing he accused his enemies of. In 1993, Trump signed a mortgage for a Bermuda-style home in Palm Beach. 7 weeks later, got another mortgage that it would also be his principal residence. Lol. Oh, wow. They got the deeds. Let's see here. State of Florida. Donald Trump. There's his pubic hair signature. Not listed as a second home. And occupy for $525,000. Yep. But where do I see that this is principal residence? Let me try to download this puppy. That's very interesting. Download. Download. Let's see here. Payment of principal, Fannie, uniform, okay, subject property, borrower, mortgage, unencumbered, fine. Where is funds for taxes, late charges? Where is occupant? Here we go. Borrower shall occupy as the principal residence. It's right there. Okay, so they're right about that. And then the second one, because the first one was done December 9th. And then the next one, looks like, was that my birthday? January 28th. My second birthday. Oh. Okay. That's hilarious. Let's pop that open. Look at this. January 28th, $1.2 million. Donald Trump. Wow, they went back far, huh? Where is it? Occupancy. Borrower shall occupy his principal residence. Wow! That's hilarious, man. Wait, let's get the pubic hair. There it is. There it is. Wow. That's incredible. Well, it's not a surprise to me. At all. Alright, back to the stinks. So, Google's up 50 basis points. Nvidia's down 45 basis points. Qs are up 20. Tesla's doing fine. How is Rocket Mortgage actually up today? On a day, yields are either stable or up. It's a little surprising. Bitcoin, nice rally here on the BTCs. Got some buying after the data this morning. Yeah, right at the data release. Boom. Bullish, baby. Soft landing. That's what that says right there. That's see. Can you see it? Can you see the words? Soft landing. Okay. Okay. What else?
Breaking overnight, President Trump.
That's the Zelensky refuses land. Okay, we see that. Anything on like money? Trump expected to sign the AI order blocking state regulations. I'll just play that in the background while I listen here.
All right, so President Trump announcing his plan to issue an executive order to limit state regulation on AI, saying, quote, "We are beating all countries at this point in the race, but that won't last for long. If we're going to have 50 states, many of them bad actors involved, and rules in the approval company like
far-reaching."
All right.
And we begin this Sunday morning with America's economic.
Oh yeah, we looked at this Jamie Dimon thing. It was so boring.
Data centers. I mean, look at all these data centers that we have actually seen. Centers turn on.
Much. It's $5 trillion, and that includes everything: the data centers, the servers, the chips, the fiber. It doesn't necessarily include the power plant or the transmission lines, but. And then we were going through today, like where's the money going to come from? Public, private credit, specialized type of finance, asset-backed securities. There will be big winners. You remember out of the internet, you got Google and Facebook and Amazon and tons of others and whole new technologies. But it took a while for some other things to come in, like the iPhone or something. So here, it will eventually pay off.
Look, Jamie, before you go, I've got to ask you about the special counsel, the former special counsel, Jack Smith, and that Arctic frost investigation, Jamie, because we had Devin Nunes on this program, former chairman of the Intelligence Committee, who said that
when they are, because we didn't exist. So what reason did they have to go after us? And I've seen Jamie Dimon and others at JP Morgan say this over and over again, that they don't debank people for political reasons. Well, then why the hell did you debank Trump Media?
Jamie, what do you want to say about that? Did you send over the bank records of Devin Nunes or Trump supporters to the special counsel when he wanted that information?
People have to grow up here, okay, and stop making up things and stuff like that. So, and I can't talk about an individual account. We do not debank people's religious or political affiliations. We do debank them. They have religious and political affiliation. We debank people who are Democrats. We debank people who are Republicans. We've debanked different religious folks. Never was that for that reason. And that's number one. Number two is I don't like debanking people. We live under very strict rules and regulations and requirements, and to protect the country, and we have to report things to the government. We're required to report things to the government. I can't even tell you when we do it, because I'm not going to tell you that either. And so I want to change these rules. I actually applaud the Trump administration, who's trying to say the debanking's bad and we should change the rules. Well, damn it, I've been asking to change the rules now for 15 years. So change the rules. And, and that's why a lot of this stuff takes place. It is really customer unfriendly. And, we're debanking people because of suspected things or negative media or all these various things. So, and the last thing, which is really important, we don't give information to the government just because they ask. We're subpoenaed. We're required by court to give it to the government. And I've been following subpoenas with this.
He sounds pissed. All right. What else here? Okay. Let's go see what else is going on here. So, Fed money printer. I honestly think the QE thing is the most interesting thing today. I mean, it's not really QE, but. All right, what do they got over here, Leisman?
Not a spoken criteria. So let's be clear. This is a departure from the norm here. The issue is not really what the president wants, Scott. The issue is the extent to which the Fed chair will deliver it, regardless of what's happening at the time. And there is some concern among the respondents to the CNBC survey that he will indeed do it despite what may be happening at the economy at the time. And so there is this concern, and maybe it's part of why you've had this little inch up in the 10-year Treasury. It's not a big deal, but it's something worth watching.
So, Kevin Hassett was making some comments at the Wall Street Journal CEO Council Summit in which he says there's room for the Fed to cut more than 25 basis points. So, if he, I guess, was in the seat now, he'd be arguing for 50. But it plays right into one of your Fed survey questions in which the result was Kevin Hassett is the favorite, but not favored. Explain.
Yeah, the survey shows, Scott, that while markets think Hassett is going to be named the next Fed chair, he is pointedly not the top choice of respondents. Take a look. 84% of respondents think President Trump's going to tap Hassett. He's the director of the President's National Economic Council. But only 11% think that's what the president should do. Governor Waller is the favored pick at 47, followed by Kevin Warsh at 23. Only 5% of respondents think either of the two will be chosen. And the reason looks to be...
There's only one Kevin that should be there.
Hassett is believed to be on inflation.
And it's neither of those.
More tolerant of higher inflation than Powell was, and slower to raise rates to combat it. And then on the other side, when it comes to the labor market, the same 76% think he'll be quicker to cut rates to address a weaker labor market. 22% saying he'll be about the same as Powell. So what's the reason? Well, 51% see him following the wishes of the president for lower rates. 41% think he'll be independent. And that's really the rub. Now, Scott, I want to be fair here and say we have not seen much of an uptick. There's been a little one in inflation expectations. And that's the way the market would really express his concern about it. So I want to be careful saying this rise we've had in the 10-year and depreciation of the dollar might be linked to concern about Hassett, but there's always a lot going on in the now $38 trillion bond market to push yields. A lot of, for example, supply coming this week.
Yeah. Before I let you run, real quick, 25 tomorrow, yeah? Is that what you think?
Yeah, 25 tomorrow. And I will say that, Scott, first of all, only 45% of our respondents think the Fed ought to cut. There's concern about inflation and the Fed not taking seriously its 2% inflation target. And then only 35% think there's a follow-on cut in January.
All right, good stuff. You'll make your way down there. We'll see you in the room where it happens, that being the press conference tomorrow. And I'll talk to you then.
All right, cool. Let's yap about the stuff there is to yap about. But let's first take a quick look here at the sticks. Let's see here. You've got Netflix. Netflix still bleeding intraday here. So much uncertainty about that deal. Q's basically straight up. Tesla, Sim's almost 64. That's hot. I like to see that. That's great. That's a good sign. Insider selling. Oh my God, look at that. Within 3 pennies, it is exactly hit my line. This is in the Alpha report this morning as well. How perfect is that line? Oh my Lord. Wow. Okay. All right. So let's see what else we have here. Let me go to the dashy. Let's go update the data page. Gotta align this. It's been a minute. Data. And then I gotta go to the bull bear scale. Let's go. Today is 12/9. Update it with what I had this morning. And see if I can update my little picture here. How do I do it? I forgot how to do it. Oh, there it is. Change scale. I want light green. How do I do this? Show. Hide. There we go. Taco scale. Taco scale still high. Okay, good. All right, here we go. Let's see. Data. Did I update it? Should be updated. Yeah, it's updated. Okay, good. All right, great. Cool. So the CoreWeave bounce is incredible. The Tesla bounce got close to the line. You can see that here. You've got Sim regaining. You've got Circle's full circle. You can see that here. And where is... Oh, yeah, and then, of course, you got NVIDIA. That's still struggling a little bit. Kind of flat. But then also, look at the BTCs this morning. Very interesting. Okay. Let's talk... so I got the summary of economic projections up as well. So let's talk about that. And then Tomo. Yeah, we're going to talk about Tomo. Save. Fed's Tomo. Okay, cool. Quick check over here. Cool. All right, let's do this. All right. Well, it looks like the Federal Reserve is about to start printing money because institutions are now talking about not FOMO, not SOMO, but rather TOMO. Yes, markets are now talking about temporary open market operations coming, and that a TOMO-like facility to support money markets and reserves is coming to make sure we don't have a liquidity crisis in markets. Now, not only do we need to talk about why that's bullish, but we got to talk about expectations for the rate cut tomorrow and what Jay Powell might say, as well as look at the summary of economic projections, because the last time we looked at the summary of economic projections, I said it was bullish, that we would break through 600 on the Qs. And you can actually look back at my sheet. In green is what we wrote down last time. Last time we looked at this, we said this is dovish. It is bullish rates down. It's bullish Qs going through 600. And folks, that's exactly what happened. Now we're going to talk about what we expect to happen tomorrow. But let's first get started with why did this skyrocket? Why all of a sudden did we see Bitcoin skyrocket right at 7 a.m.? Why did we see Circle go full circle and start rebounding off the floor? Why are we seeing SIM come back to 64? Why are we seeing Tesla rocket off 433.99? Why are we seeing CoreWeave reject, but actually get to and then reject within 3 cents of my line? Mind you, all of these right here were those, well, with the exception of Bitcoin, we just watched this one, but all of these that I just mentioned, Circle, SIM, Tesla, CoreWeave, all mentioned in our alpha report this morning. You could use coupon code Santa reinvest at meetkevin.com if you want, but we got to answer why. So why did this happen? This bounced right at 7 a.m. We covered it in our course live stream this morning. Remember, you get lifetime access. Was because of JOLTS data actually really impressing. Usually this JOLTS data comes in pretty damn close to expectations. Not only did today's numbers not come in close to expectations, but they smashed. They absolutely smashed. It was really good. The numbers were so bullish that not only did we compare them to the ADP numbers, but we updated the bear bull scale to a 5.6. The numbers are bullish. We updated the bear bull scale because of JOLTS and the weekly ADP data, which really didn't get a lot of news. JP Morgan says consumers still healthy. We'll see. Well, hopefully the consumer can step up and we can start getting job growth again like what we saw in Canada. Hopefully that's not all part-time. But you got to think about this with the ADP report. What did we get with ADP? Weekly ADP, which got like no attention this morning, suggested that we are growing at 4,750 jobs per week. Now that initially you might be like, Kevin, that's paltry. That's terrible. That sounds like nothing. But it works out to about 19,000 per month. A little bit more because week versus month, a little bit more than that. So call it about 20,000 per month. And as long as we're positive over zero, I think we're above the break-even rate of employment. Now, I'm not saying there aren't problems in the labor market. There definitely, we got to pay attention to these. That's why we're just slightly above mid-range. Well, let's put it this way. I'm adding stocks to my top 10 list of stocks to buy. We got a full list of top 10 stocks out. We just added number 10 this morning. That's doing well, and so is our number 9 from last week. These are great. But you can see those all at meetkevin.com in the alpha report. But anyway, this 20,000 jobs roughly at a monthly, if break even's around 0 to 20K, we're basically at break even, which means the unemployment rate should stay stable as long as the participation rate doesn't skyrocket. Now, if a lot of people go back to work, the participation rate could skyrocket, or we get more layoffs, of course, then we're going to have problems and we're going to have poopy doopies. That's why you want to be cautious. And it's exactly why I think we're now not just talking FOMO, fear of missing out, or SOMO, sadness of missing out, but that the Fed is going to turn on the TOMO money printer. Yeah, we'll talk about that. Now, why would the Fed turn on the money printer for TOMO, and how does that work? Well, in part, I believe it's because I think when we get the summary of economic projections tomorrow, I think we're going to see a bump in the real GDP projections for 2026. I think they'll bump that up, And so I'll go ahead and make my prediction right here. So my prediction, and I'll make a note that green was September, red is 12/9. Okay. So what do we have here? 12/9. There we go. Okay. So my prediction is that they'll actually write this up to 2-0 tomorrow. So I think this is going to go to 2. I think this will actually go to 4.6 for the end of next year. And that's going to be in anticipation of the labor force participation rate going up due to participation rising. And then I also think we'll have a bump on inflation. And I think that they're going to take this PCE level, maybe not this number. This might go like 2.7. But I actually think core has the potential of indicating, I'll go 2.7 as well. I think a little bump on both of these. Core might go 2.8, but I'll go 2.7 here. We also, previously we anticipated 5 cuts by the end of 2027. If you included September, that would be accurate, but I actually think that's been revised more to about 4 cuts. That would be October, December, and 2 in 2025. That's sort of the soft landing expectation right now for the summary of economic projections. This would be the, 4 rate cuts of OCT, DECE, 2 in 2025 equals mostly a soft landing play. The issues would be twofold, labor force participation rising or layoffs rising. Not seeing that right now, which is good. Again, the ADP numbers this morning were great, and the JOLTS numbers, the fact that we saw job openings up, great. Now, job quits were down, so people are nervous about the job market. But layoffs, not enough to really cause a big shakeup yet. Hopefully, knock on wood, it stays that way. And job openings rising was a really bullish surprise. And so it's holding that 10-year yield a little bit elevated, which is contributing a little bit to funding stress. Now remember, the Federal Reserve stopped QT. QT is over, right? QT ended on December 1st. It's been about 9 days. So not only did quantitative tightening end, and we see this repo stress hasn't shown up since December 2nd, which could just be residual overnight from December 1st, but we have not seen a single bar chart here show up on the repo facility, suggesting maybe ending quantitative tightening was a good thing. But now we're talking TOMO. So what the hell is TOMO? FOMO, SOMO, TOMO. No. It sounds like that comedian, who's like, so if COMB is comb, what's BOMB? Boom? No. Bomb. I love those grammar things. I think they're hilarious. No. But anyway, if you go to this, Tomo, in honor of him, who's now dead, that comedian. But anyway, not FOMO, not SOMO, but TOMO. These are temporary open market operations. Now, this is not technically quantitative easing, okay? It's technically QE light, or QE temporary, right? It's sort of like overnight QE is the way to think about it. Basically, the Fed says, we're going to print money to support overnight borrowing, but we're going to pay off that borrowing right away. And the printing, we're going to remove the printing right away. So it's kind of like, all right, basic human analogy. We ran the vacuum cleaner like Luigi from Luigi's Mansion. Sucked up as much money as we could, okay? Turned off the vacuum cleaner, all right? And now we're like, all right, boys, we're putting the vacuum away. And then there's a little bit of private credit stress. And so what are they doing? They're just sort of like, vroom, 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 vroom. Like they're revving the vacuum on and off, like really quickly, like, that's kind of QE light. So it's like, but you also have the blower setting. So it flips between vacuum and blower. So it's like, blow, vacuum, blow, vacuum. It's weird. I don't know if the analogy is any good, but the bottom line of it is it's designed to support the liquidity challenges that you're seeing at banks, aka private credit. Because we know private credit is basically sucking on the titty of the banks. And if private credit is sucking on the banks, and the banks need liquidity, when the banks run out of liquidity, private credit runs out of liquidity. That's not good. But if the banks get overnight liquidity, private credit holds up and everything's Gucci, so you can actually grow GDP. That's the goal. Now, Morgan Stanley is really bullish on robots, okay? I'm just going to throw this call in here. Okay, look at this. Look at this. You ready for this? China Humanoid Robotics Survey. We believe AI-enabled robotics will help usher in a third industrial revolution. Well, like, imagine now, Tomo plus robotic revolution. And if you get the soft landing, bullish catalyst, anyone?
Bullish catalyst.
Yeah. How about Santa Rally or coupon code Santa Reinvest? Lifetime access to me Kevin membership. No, really, it's actually incredible. As long as, we don't fall off a cliff with the labor market. But look at this. Our GDP is probably about $25 trillion. And they're saying that AI-enabled robots alone could generate $25 trillion of GDP alone from robots. So it's basically like creating another America. It's literally like doubling today's America. It's like doubling America 2025. And think about how big of the American economy, is. You're doubling that. Like my venture capital company, we invested in Apptronic, the humanoid robotics play. I personally invested in them when they were like really risky and about to go bankrupt and almost out of money at like a $400 million valuation. Then when they stabilized, we invested in them at like a 1.7 valuation. At that point, we had our VC. We invested in them there. And now the information is reporting that they're worth somewhere around $5 billion. And I wouldn't be surprised if they keep going because it's sort of like a discount Tesla. And given Tesla's valuation, a very discount Tesla. And, there's talk that Apptronic actually helped set up Tesla's robotics, but, who knows? That could be just rumor mill. So anyway, it is really interesting, this robotics play. And so this broadly is long-term bullish, but the problem is I do agree. I think China is going to eat our lunch on the manufacturing, but that's okay because even if China eats our lunch on manufacturing, who's going to buy the robots, right? China might eat our lunch making the robots, but who will buy the robots? Americans! Americans will buy the robots. It'll make us more productive. Makes Americans more productive, right? So we benefit from the productivity benefits of the robots. So I'm very excited about that, and obviously so is Morgan Stanley. But anyway, going back to Tomo over here, the Federal Reserve tomorrow, we broadly expect them to cut. This data this morning could be enough to keep Powell a little bit hawkish, so expect a little bit of volatility. But really, if they've announced any kind of Tomo facility, it's just pure bullish. And so I think this talk about Tomo, along with like a soft landing style data, is what really led to this rocket ship in like Bitcoin and asset prices. Even Tesla. I think the Morgan Stanley piece by on robotics was huge for this. So it's absolutely phenomenal. And CoreWeave, coming back to its 90 line is huge. Although the one thing that's weird today is that NVIDIA, while it gained yesterday on news about selling to China, if you look, you're within about $1.50 of where you were before the China news, which kind of suggests that there's, and I shouldn't say this, but I'm going to say it. We believe in, you made it to the end of this segment, so I'll reveal it, but we believe that the big PP plays.
Big PP.
Right now, this is my sort of pro take, if you will, no guarantees. But I think, the noobs right now are saying, hey, Kevin, like, it's, we still got to be in all the chips, That may be true. Like, NVIDIA's valuation is cheap, okay? They're like a 1.6 peg. But I think the pro is saying, where's the money being made from AI? And it's in part Google, it's in part AI software companies, but you have to pick the good ones. And so I think we're transitioning from chips to the AI software. And I think that's one of the reasons Apple is booming so much, which is ironic because while Apple's got the software moat, they have basically no AI. Now, to some extent, they're a little bit insulated from the AI spend, and people believe this is really a chart of the hope that Apple will finally adopt good AI, right? But I think that's the next phase of where we sit. Now, I obviously also feel so optimistic about this. I don't want a recession because I honestly think as long as we don't have a recession, we can hopefully, knock on wood, IPO our product faster, right? We got our, Invest in House Act little disclaimer there. There's risk with every investment. But I'm of the impression we look at our app and our software team and we're like, dude, the things that we can do, not only once we get our Reinvest AI app out this month, and y'all start using it and we add more features, but beyond that, we move from into new real estate AI verticals. Just our roadmap is crazy in terms of some of the plans that we have. So we're really, really excited. And so in a biased manner, I don't want a recession. However, I'm aware of the risks and being conservative because I also, you should always be looking at investing as a long-term outlook, right? Look at it as, hey, how can I invest for the next 10 to 50 years? For House Hack, those are my 50-year plays. My top 10 stocks to buy list, those are my 10-year plays. Those are stocks I'm looking at going like, I wanna hold these for the next 10 years, and how can I get more exposure to them? So, pretty excited. But this is good number. These are good numbers. We'll talk Fed tomorrow. We'll be covering it live. And overall, I gotta say,
bullish catalyst.
Yeah. So there you have it.
Kevin's somebody we'd consider. Kevin is fantastic too.
Kevin is very talented.